All right. Good evening, everybody. Good evening. I hope you're doing well. My name is Chris Price, and if I would like to ask everyone if you are not speaking, you can go ahead and mute your line. That way, we don't have any background noise. But let me go ahead and get us kicked off here. My name is Chris Price. I am the host of the Wealth Mindset and Real Estate Investing virtual meetup here. I'm also the CEO and co-founder of Red Fox Multifamily. And before we get into tonight's event, I want to make sure that we spend a little time giving you a little background about who we are for those people who might not know. At first, the Wealth Mindset and Real Estate Investing Meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but they don't necessarily have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate and passive investments. And the Wealth Mindset and Real Estate Investing Meetup is sponsored by Red Fox Multifamily. Red Fox Multifamily helps pharmaceutical and life science industry professionals diversify their portfolios, add passive income, and get all the other perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities we get access to from our trusted network of top operators in the best markets throughout the country. Partnering with us makes investing in real estate completely hands-off, allowing investors to add passive income, build equity, and save on taxes, all while being an investment vehicle that's backed by a hard asset. So that's a little bit about who we are. Let me give you a little bit of background on the logistics for today. What I'd like you to do is please mute your lines when you're not speaking. If you could, hold your questions to the end of the presentation, unless, of course, our speaker asks you to engage and send out, shout out and ask your questions directly throughout the presentation. Some folks I know prefer to have some more interactive. Some folks prefer to have more of a presentation and then answer at the end. But yeah, just wait for those cues. If you have something that's burning along the way, please do ask your question. Raise your hand. Type it in the chat. Whatever you want to do, we'll make sure that we keep a queue of those questions so that we can address them. This presentation is being recorded, as I mentioned just a few moments ago. And I also want to let everyone know, just from a legal perspective, this material does not constitute an offer or solicitation to purchase any securities. This is information only and should not be construed as business, financial, or legal advice. So, a couple other things here just before we get started. Look, I enjoyed connecting with folks. We're just about 1,000 members on our meetup, which is awesome. And many of them I haven't met. Some people have joined us live. Some people watch our recordings. Many people send me emails and I get a chance to interact with folks. But I love connecting with folks and just being able to talk about mindset, wealth mindset, real estate investing. Please feel free to shoot me an email. I'm at Chris@Red Fox Multifamily. If you want to find me on social, you can do that as well. My QR code is right here for those of you if you want to download my business card. Otherwise, just please do send me a message and I'll be happy to connect with you separately offline. So in terms of the agenda today, we are going to go through just a few key things. We're going to cover off on our introduction for our speaker this evening. We're going to have a presentation by the speaker, and then we're going to do a Q&A session. And if there's time, we'll allow for a little bit of virtual networking. But without further ado, let me introduce our speaker for this evening. So this evening, making his second appearance on the Web Wealth Mindset in Real Estate Investing Meetup is Bisi Ogunwale. Um, Bisi is the Senior Marketing Director of World System Builder, or WBS for short, which is focused on empowering people with financial knowledge that helps them build a financial independent future. Bisi is a certified financial educator. He's been helping hundreds of people across the US and Canada to build a strong financial foundation. He's more interested in empowering people with financial knowledge that helps them build a financially independent future. World System Builder is a community of financial professionals on a mission to deliver the best financial education and revolutionize the financial service industry through a reliable and buildable system. So without further ado, let me hand it over to Bisi, who I have to say this just before I do hand it over. So Bisi and I have a mutual friend and actually one of my business partners in real estate introduced us several months ago. And we had a great connection right away. And that connection was mainly focused on our passion and commitment for helping others and educating others and helping to add to folks' financial intelligence. But one of those core sort of foundational things that we had passion and connection about was that of life insurance. And BC reached out to me not too long ago and said, "Hey, Chris, I'd love the opportunity to get back on your platform and talk to your community because it's life insurance awareness. It's going to be Life Insurance Awareness Month, and I'd love the opportunity to be able to educate folks on the importance of life insurance." And we'll say that through BC and through others, one of my other very good friends who was educated me several years ago on the importance of life insurance. And when you're young and you're thinking about things years ago, we didn't have a clue about what the power of life insurance, and we saw it more as an expense and an investment. And then we got smart about things and started learning about the importance of life insurance and how wealthy people utilize this vehicle as a tool to help build and protect, pass on their wealth for generations. And that's something that many people need to know and understand about how this tool works. And it is not an expense by any means. This is a necessary asset that people must have in order to build a strong foundation. And I know BC is going to communicate that message to know. So again, I would like to introduce you to BC. Thank you, BC, in advance for taking us through the content tonight. I'm going to stop presenting so that you can share your presentation, and then we can get on with it.
Thank you so much, Christopher. Do you hear me okay?
Yes, we can hear you just fine.
Nice. Good evening, everybody. Bailey and then Mr. Price. I hope you hear me properly where you are at.
I am.
Nice. I'm just going to share my screen with you in a minute, and then we can start from there. Can you share my screen?
We got you.
Okay, great.
Yes.
Nice. Just like Chris said, thank you so much for that wonderful introduction, by the way. I truly appreciate it. September every year is Life Insurance Awareness Month. The United States Congress has made September to be Life Insurance Awareness Month, mainly because of 9/11 that happened years ago. So today I want to talk to you about money, wealth, life insurance. How can we use this instrument to take our wealth building strategies to the next level? I will start by looking at where income gaps is in America today. Some data that is available from the Federal Reserve shows us the distribution of wealth between families in the United States of America over the last 30 or thereabout years. Between the year 1991 and 2021, we looked at where people in America is. And if you see, what I'm showing to you here, that purple line represents 50% of America. The next yellow line represents about 40%, which means that the minority of the people in this country are controlling the majority of the wealth, while the minority of the wealth is being controlled by the majority of the people. And that brings a question for me. How is it that the rich continue to grow rich while the average person on the road gets, poorer every year. So for us in World System Builder, we have an idea of what we want people to understand. We want people to build solid financial foundation for themselves. And these are the pillars of what we look at as building a solid financial foundation. You want to have proper protection for yourself. We want to help people to understand they can manage debt, they can put money aside for emergency, and then ultimately, just like Chris is trying to help people to do here, build long-term you can rely on, for years and upon years. Ideal structure that we propose to people is to at least have $1 million of life insurance to be able to take care of things for yourself and your family in the event that something happens. But you can have your own goal. We don't want people to carry debt if possible. We want people to have emergency fund. We want people to have, significant amount of investment. But if I'm being honest with you, this book called Killing the Sacred Cow, I started reading this book not too long ago, and it's taught me a whole lot of things. What is a sacred cow normally? An individual or an organization or a teaching or a belief that we considered exempt from, questioning or criticism. That is what we term as sacred cow in this place. In the financial services world, sacred cows are myths and some sort of tradition that distort our thinking about money, wealth, and success and prosperity. We've come to become used to accepting some assumptions and handed down, advice. And often we choose not to even make time or effort to question those things, to just, have our own opinion and have a look at, what's going on, mainly because we take the word of expert or people that we trust or those who love us or we love them. But the truth of the matter is there are 4 major realms of knowledge that we're beginning to see. And those things are, 1, the things that we know, the things that we know or we think that we know, the things that we know that we don't know, the things that we don't know that we don't know. And the last one is where the biggest number of people are. And those in that place combined with the first 3 are even larger than those. So I want to talk about Americans and the human life concepts that we put on our life. A large proportion of people in America today, they're doing what we call financial planning and risk management in the reverse, way. Most risk management and asset protection strategies focus on protecting the golden eggs, like you protect your automobiles, people protect their possessions, their homes, rather than protecting the golden goose that is laying those eggs. In this case, human life. Imagine if you purchased a new brand new Mercedes-Benz and the car was to get stolen or totaled in an accident. Most people want the economic value of that particular automobile to be replaced. You would not be happy if you were given a Yugo automobile to replace a Benz, right? And so I want to talk to people about the concept of how do we value human lives. Similarly, if you were to purchase a property of $1 million and it got burnt down while you were away, everybody will want that economic value of the home to be restored to where it was before the inferno. Ideally, and for most practical purposes, we want everything to be replaced to the intrinsic value or the economic value that it was before that time. That's the reason why we buy property insurance. That's the reason why we bought auto insurance. That is the reason why so many people buy insurance on their, on their gadgets, like phones, like, appliances and stuff like that. Ultimately, the purpose of all life insurance, or as it should be, is to protect human life and the ability to create more value. If that were to be the case, why is it then that we get so far off track when it comes to ensuring the economic value of our lives, the greatest asset of all? I want to quickly talk to us about, the different types of life insurance that are out there. You see, there are so many types of life insurance, term insurance, whole life insurance with insurance plus cash value. You have universal life insurance that has, insurance plus cash value, but there's a lot of flexibility. We'll have variable universal life insurance. You have index universal life insurance, and then you have index universal life insurance that is now, being housed with a long-term care or critical illness protection or the rest of those. Regardless of what type of insurance you have, it is not important as much. The one that is available the day you need it is what is most important. Personally, as BC, my specialty is to talk to people about cash value life insurance with long-term care, protection for people. Why is that? You see, many people buy life insurance because of the death benefit, because people think, oh, if I die, I want so person to be protected. I like that. You see, we don't buy life insurance because we're going to die. We buy life insurance because the people that we love and care about are going to live. So I want to show you a situation. Last year, 2022, I insured someone in the month of June. And then just 6 or 7 months after, in December of 2022, this person passed away. Even though it was a very painful experience, I was very, very happy to be able to present a check of $700,000 to his wife and to his 3 children. And we literally just finished that case in August last month. I'm really excited to talk about these things because a lot of people don't, see the value of what we do when we talk about people, protecting themselves. Early in this year as well, I was able to hand over a check of, $1.6 million to a family just because someone decided to insure himself, 4 years ago. This man left his office, he was going home, and he was involved in an accident. A 18-wheeler truck just, ran into him, and then that was it. But in March of this year, from Transamerica, we got a check of $1.6 million for the wife and the 4 kids. I mean, if this isn't loving your family, I don't think there's anything that can compare to it. But it's not all about death benefit. What about living benefit? What is the plan if you get sick, critically ill, or, you get disabled? Imagine if the guy didn't die and he was to get disabled. What is the plan? A couple of months ago, the Center for Disease, CDC, Center for Disease Control, they released, these statistics about chronic diseases in America. They said these are the leading, causes of death and disability in America today. Heart condition, cancer, lung disease, stroke, Alzheimer, diabetes, chronic disease with the kidney. And their estimation is 6 out of every 10 adults in America will have at least one chronic disease, while 4 out of every 10 adults in America will have 2 or more of this. What can we do? How do we begin to think about this? You see, we are living long today because medical advancement and medical technology makes survival a reality. But what about financial survival? If we look at numbers that are being thrown out, 70 million people in America today have one or more type of cardiovascular disease. 70 million. Let that number sink in. In this year, 2023, it is estimated that at least there will be about 1.958 million people that would have new cases of cancer. And over 600,000 people are going to die from cancer. What that means is we will have at least every day 5,365 new cases, and we would have about 1,600 people passing away from cancer on a daily basis. If that were to be the case, how can we prepare for this? Think about this. This is an illustrated, living benefit in action. A female of 40 years old decided to buy a life insurance of $250,000, but that life insurance had a rider of living benefits. So if I were to pass away, I want $250,000 to be paid to whoever my beneficiary is. But if something happens to me, I want to be able to have access to part of that money to be able to take care of myself. At the age of 48, 8 years later, she was, she was diagnosed with heart attack. She had a condition. And because there is accelerated death benefit that is already attached to that particular life insurance, she got paid $124,000 out of that to be able to take care of her medical bills. Another situation in this case, Michael. This man was age 50 years old, bought life insurance of $1 million. If something were to happen to me, I want my family to be paid $1 million. But if something happened to me while I'm still alive, I want to be able to take advantage of this life insurance. That living benefit afforded him the opportunity to get at least $559,000 5 years down the line when he was injured in a major accident. And this changed a lot of things for so many people. I want to quickly show you what the national average for different types of long-term care or stuff like that will look like. I want you to look at this number. This is 2021, by the way. And look at the projection using the state of Boston, the area of Boston, Massachusetts, as, let's look at 2036 from today. What would that look like? This is the kind of money that some people will need to be able to take care of themselves if something were to happen to them. How do we begin to put things in perspective for each and every one of us? Now, this is me talking about life insurance as a death benefit, life insurance as a living benefit. But let's talk about other things outside of death and then sickness. Because if I pass away, I'm gone and I'm gone. If I can wake some people out of their grave and let them see the way the people that they leave behind are living, they will think about their lives differently from the way they're doing it right now. So many people who are sick today are in their condition. They wish they did things differently, while they were well. It's okay to invest money, but the first thing we need to think about is protection. So I want to talk to us about where are most Americans today keeping their money? I don't know if you guys have seen this book that is called Money, Wealth, Life Insurance, How the Wealthy Use Life Insurance to be able to take care of things for themselves. This book was written by Jake Thompson in the year 2013, and it's still very profound today. I'm going to show you something that, I find really very interesting. This guy was talking about cash value life insurance, how it plays a massive role in financial institutions, corporations, and, banks. More than you can ever imagine, they are using this thing for different reasons. They buy life insurance by the billions. Bank of America, at the time when this book was published, had about $19.6 billion in life insurance asset. Wells Fargo, about $18 billion. JP Morgan, Chase Bank, they have over $10 billion. We have other corporations that are also using life insurance. I looked at I look at the books and I was just like, okay, where are these banks today in terms of this life insurance asset? And I went and looked for their balance sheet. As of 2022, right? Bank of America now has over $24 billion in life insurance asset. Wells Fargo has about $19.5 billion and Chase has over $12 billion in life insurance asset. If many people are putting their money in savings account in the bank, but the banks are investing their own money in life insurance, why shouldn't we do the same thing? Why should a bank put their money in life insurance is a question that a lot of people get to ask me. But I want to talk about tier one capital of a bank. The core capital of a bank is called tier one capital. Cash surrender value of a bank-owned life insurance is classified as on the balance sheet. It is an integral component of what they call their tier one capital, most important component of any bank. It is unlike traditional retirement plans like, your 401k or IRA and the rest of them. Tier one capital is at the very core capital of any bank that you can think of. It is a bank's bedrock. It is the foundation and the structural steel on which they build their enterprise. The larger their tier one capital, the stronger the bank is. When the 2008 and 2009 mortgage crisis happened, I know I was in business school that time. I was studying MBA in finance. I will never forget this. I just landed in London, Heathrow, London, when Lehman Brothers went down, and the Congress decided that they wanted to look at some of these things. That was the first time I was open to what exactly the tier one capital of a bank would be. Most of the bank MD CEOs that came to that inquisition, they kept asking them, where's your tier one capital funded? This is the bank's lifeblood. So let's talk about other corporations that are doing the same thing and small business owners. I don't know if you know any organization that you see on this screen that is familiar with you, but I see General Electric, I see Procter & Gamble, I see AT&T, I see Verizon, I see Avon, I see Starbucks, Office Depot, I see Nike, I see, Walt Disney, Harley Davidson. I'm going to share with you some of these organizations and what they're doing with life insurance. JC Penney and Walt Disney are a testimony of the power of, using life insurance as a loan. There was a time during the Great Depression that, JC Penney went into some really tough time. And what did he say? He said he built $1 billion empire in retail. When Penny died in 1971, the press wrote that in the great stock market crash of 1929, he was almost wiped out. But with the money he borrowed on his $3 million life insurance policy, he was able to rebound. Rebound is an understatement. The best of us can see, how people are getting life insurance to be able to get loans from banks today. The same thing happened with Walt Disney. When Walt wanted to start the Disneyland, in 1952, he cleaned out all his savings, sold a vacation home in Palm Springs, and then recruited a help of so many employees that he could work together. But the one that changed his life the most was him taking a loan on his life insurance policy. He used a $100,000 loan from his life insurance policy to start what we call the Walt Disney Incorporated today. Walt used the money from his life insurance to fund the feasibility study with Stanford Research Institute to pinpoint an ideal place for Disneyland. In the end, they decided that Anaheim in California would be the best place to build the park. The rest is history today. Let's talk about another organization, Foster Farms. In 1939, they said a young couple that was named Mark and his wife Verda, they borrowed against their life insurance policy so that they can invest it in their 80-acre farm in California. They wanted to be able to raise turkey and chickens. Today, that organization has over 10,000 employees and they produce across, the globe. What about Stanford University? Leland and Jamie Stanford, when they lost their son, Leland Jr., they wanted to focus on how they can help other people's children. And they decided to start a university, which is, the famous Stanford University that you and I know today. When the school was struggling, when Leland died, Jane used the life insurance proceeds that she got from the death of her husband to be able to pay the faculty and allowing the university to open for a 6-year period that they have financial challenges. Some of the concerns that we see with business owners is how do they plan for retirement? How do they protect themselves against losing, their key employees? What about succession? What about tax planning and preparing for the future? I took an excerpt from a very good book that is called the Lisa Fund. This guy said a IUL Lisa Fund can be used for exactly this type of buy and sell agreement, which makes for an excellent exit strategy in business planning. Whether partners decide to leave the company, whether they pass away or they become disabled, the insurance compensates the remaining partners with money to be able to buy out the company. In the case of death, most attorneys will arrange for the money to go directly to the widow so it can be possibly transferred tax-free, helping the widow to avoid capital gain taxes on the sale of the business that the husband was involved in. It also helps to make the transition simple without, the widow inheriting the partnership in the business and having to decide whether he or she wants to, take on running a company. You can also use it to do business planning in case of key person in, insurance. It is used to cover the economic value of a key person in a business. For example, if a CEO is an integral part of a company, right? Or if financial success of that organization is dependent on that person. And if the person were to die suddenly, the policy provides tax-free capital to be transferred to the business to help the company recover from the loss of that primary, person in the business. It can be of, great value for many companies, whether it's a large corporation or it's a small business. They would choose to max fund, that policy and they can take advantage of it in so many ways. You can find that they can use it for working capital as well. So many savvy professionals today are using life insurance to be able to fund working capital because it provides them a significant advantage over the traditional method. when saving, they typically set aside money so they can use it for short-term business needs in the business savings account. Yes, this provides liquid asset to cash when needed. But what you're doing is you're earning small amount of money on the money in the bank. They can put it in another place where they can earn more money, and then they can still go to do whatever they want to do. I decided to put this other, excerpt here because I find it really very interesting. Andrew, in his book, was talking about how a gentleman called Bobby Collins was using his life insurance to provide himself additional income by becoming a lender. Apart from the fact that the life insurance gave him the reassurance of an income tax-free death benefit for him and his wife, they also provide a business opportunity. He has leveraged his life insurance to become something of a commercial bank himself. He's extending short-term loans to contractors at between 16 to 18% interest. He borrows money from his life insurance policy and then lends it to contractor. And then when the money comes back from those contractors, he repays his loan, using the strategy to be able to make money for himself and increase the value of what his family asset can become. What about real estate? You see, the reason why I'm in this place today is because of real estate. Christopher and I got together because of one of my very good friend and also a business partner to him. A mutual friend of us connected us together and said, oh, you gentlemen, you guys need to talk. I love real estate. I have a couple of my own. But I'm beginning to find that we can also look at about how life insurance can enhance that opportunity for us. Now, there was this paper that I read somewhere, and I want to quickly share the benefit of having cash value in a life insurance instead of a home in some instances. So don't put all your egg in one basket is what this paper is talking about. And this gentleman called Don Blanton was talking about how he was able to see what life insurance with cash value did for people, especially when there's a major disaster. He said, I could never have anticipated the impact of Hurricane Katrina. We have been in the path of hurricane for many years, but never dreamed a hurricane could change our lives forever. I have believed in conviction that cash value is more valuable than home equity, and I've preached that message for over 12 years now. I have encouraged my client over the years that having their home paid for is a desired position, but doing so in a way that gives us liquidity, use and control of their money may not be the best way to reach their goal. He said that his personal opinion is that when you have cash value equal to your mortgage balance on your home is paid off, having the money to write the check if you desire is most comforting. It is necessary to have your home paid off, but you also need the money. With Hurricane Katrina, what happened with so many people is they lost their homes. So many people who had their equity in cash value had much more different reaction to their tragedy. Instead of them to be fighting with attorneys and be fighting with lawyers about what they're going to get back, their mortgage company froze their payment due to the event and even waived payment for a particular period of time. What these guys did was what became, the opportunity of why Don Blanton, the president of Money Tracks, began to talk about, cash value life insurance more. He said something about, meanwhile, they had insurance. They had secured loans on their contract to put down payment on a new home to live in until they received their insurance settlement on their damaged homes. This had provided seamless opportunity to get their families and job back on the, going forward. They will one day sell the home that they are in today and pay off the loan balance on the insurance policy and return to their original home when that home is ready. He said, I have had clients who have used their money in their contract, in this case, life insurance, to start side businesses that is related, to the cleanup. And when the cleanup started all over again, and some of them begin to be able to start different type of business to be able to take care of things for themselves. I want us to start thinking about how can we begin to look at what if something happens? Where else can we turn to be able to have access to cash, to be able to take care of things for ourselves and our family? I want to talk about the importance of, retirement planning and how we can use insurance to be able to do that for ourselves as well. You see, I saw a billboard somewhere that says many people spend more time liking Facebook and Instagram posts than they do planning for their retirement. And I thought that was really very profound. Cash value life insurance is something that I want to talk to us about. There is this football coach in one of the universities in Detroit, University of Michigan to be specific. This guy's name is called Tim Harbaugh. He made sure that the life insurance, in this case, a cash value life insurance, was used to make an arrangement for him in such a way that it made him the highest paid college football coach in the entire country. And everybody wrote about this particular stuff. What most people do not know, however, is that the compensation strategy was designed to provide him with millions of dollars of tax-free during his retirement times. It is one that can also be done incredibly effectively on a much more smaller scale for anybody that wants to be involved in that. I was looking for another example of how people are using life insurance to be able to take care of themselves in retirement. And I saw another way of how benefit is paid, in a life insurance situation. This is the statement of a company that is known as General Electric. You remember I showed you how General Electric used life insurance personally. As a corporation. But this is them paying their corporate employees. Instead of putting money in their retirement savings plan, they put the money in a life insurance account for them. Why do they do that? Because they know at some point in the future, IRS will come to collect taxes on those, payments. And that way, they want to make sure that they can take care of things for a whole lot of people. But instead of putting money in their retirement savings plan, they put it in their life insurance policies. What type of life insurance are we talking about here? A cash value life insurance, in this case, universal life insurance policy. They put money there because they want to be able to run away from taxes and they'll be able to use the money in the future for whatever it is that they want to use it for. Let's talk a little bit more about how these can be of benefit when we consider taxes. For me to be able to talk about how taxes, affect us, let's talk about how taxes has been over a long period of time. I don't know if many of you guys have seen this, but this is over 100 years history of federal taxes in the United States of America. From 1913 to the year 2018. There was a time that a lot of people in America literally were working for Uncle Sam. 94% of income was paid in taxes in the 1940s because of the war and then the Great Depression. And so the government started different types of pension plans today so that people can put money aside for the future. And hopefully they will be able to access those money at lower taxes in the future. But given what has happened in the last 3 years with COVID and the amount of spending that the government of the United States of America has done, our national debt is about $33 trillion today. Do you think taxes will go down or taxes will go up in the future? I want you to think about that. And that brings me, to how our money get taxed. There are 3 major ways of how we get taxed in America today. The first one is tax now accounts. If you put your money in the bank account, CD, stocks, mutual fund, ETFs, and the rest of them, all of those are taxed like you have capital gains on your asset. There are accounts that are called tax later accounts, like our pension account, 401k, 403b, IRAs, annuity, pension plans, and stuff like that. Those are taxed at income tax rate of the person that is getting taxed. And there is also another one that is called tax advantage accounts. These are Roth IRAs, mini bonds, 529 plans, and 7702 plans. Those are taxed in a way that you don't have to pay taxes for whatever it is that you put in that account. Let me show you scenarios of how these 3 buckets work and how, if we understand how taxes work, we would be able to think about things a little bit differently. This is an hypothetical situation. Let us assume that somebody wants to be able to fund retirement, and then when he gets to retirement, he wants to be able to take money out, or she wants to be able to take money out. And this person, whether the man or the woman, she or he, needs $300,000 on an annual basis. Based on that income level and the fact that the person, put it in an account that is taxable, this person would pay taxes of almost 30% on that income when the person have access to the money. There's the state and federal taxes that needs to be paid. But what if this person understand that they can diversify their investment in different buckets, using different strategies before the time they would have access to the money? They can reduce the amount of taxes that they are going to pay. In this instance, they pull equal amount from different buckets. In the first bucket, they pay state and federal tax. In the second bucket, they pay state and federal taxes. But in the third bucket, they don't pay any form of state or federal taxes. And because of the diversification of where to put their investment before the time they will need to distribute it, what they've done is they have reduced their taxes by almost half, putting extra about $40,000 in their pocket. Extra $40,000 on an annual basis is an average of around $3,200 extra tax-free into the pocket of that person. Think about it for once. How much can that do for somebody who needs money in retirement? And a lot of people ask me, Bisi, what if I can be able to put my money in places where I don't have to pay any form of taxes? Brothers and sisters, that is not possible in America today. You see, we all don't know each other from anywhere. We're not related in any way, but we have one uncle in common. That is our uncle generally, and that's Uncle Sam. Uncle Sam decides what he would take at any point in time. But we cannot completely run away from him, but we can shelter our money in places where he cannot be able to take as much as he would want to take. And that brings me to the third scenario. What if I can scale more of what I want to use for the future, way more towards where I don't have to pay, so much taxes, using tax advantage assets? So in this instance, for the first part, I draw 50K from an asset bucket where I have to pay taxes. I draw another 50K from a place where I'm going to pay capital gain taxes. And then I draw a significant portion, $200,000, from a tax advantage environment. Because of this tax diversification from the beginning of when the investment is being done, this person is able to save significantly on taxes that he's going to pay to the government, reducing taxes effectively to a single digit of just 6.11%. So let's look at the three different categories together. Category 1, the person ends up paying about 29% in taxes. Category 2, the person pays about 16% in taxes. I don't need to ask you about which scenario would you want to be, because the third scenario gives us about just 6%. Everybody will want to be in the third scenario. But the question is this: how many of us are using that bucket to be able to put money aside? And that brings me to how effective of a tax efficient vehicle a life insurance can be, especially if it's a cash value life insurance. I want to encourage everybody to consider adding a cash value life insurance to their investment portfolio, because there are some tax codes under IRS that allows you to be able to have death benefit paid to whoever you name as your beneficiary tax-free. There's a tax code in IRS tax code that allows the money that you put into your cash value life insurance to grow in a tax deferred manner. You don't have to pay annual taxes on the gains. And then there's also a tax code that allows you to have access to the money that is in that cash value as an income in a tax advantage way that you don't have to pay taxes on it. I want to show you an example of something that I did for somebody. And this is a recent statement of a universal life insurance, index universal life insurance to be specific. If you look at this statement was for 2 years, 2 consecutive years, May 2021 to May 2022. At the beginning of the year, the cash value that this person had in his policy was about $236,000. And how much premium did the person pay that entire year? Just about $1,000 that was paid into it. Well, guess what? How much interest was credited into that account? Over $29,000 was credited. Why? Because the person understands the power of compound interest and being able to protect himself or herself against the downfall in the market. Although there were deductions, but at the end of the day, this person account ended up with over $259,000 cash value at the end of that, fiscal year, which is May 26, 2022. But let's look at May 2022 to May 2023. The opening balance in 2022 is $259,000 of cash. But this guy did not put any money in terms of premium into that policy. Nothing was paid because he decided, I want to take a premium holiday. But even at that, he still got interest credited to him, about $2,000. The market was crazy in 2022 leading into this year. And we all know that. Market lost a lot of money. And the guy decided, I don't want to invest, but I want my money to be, there the way it is. You know what? Even though the deductions are still there, that person is still able to protect the value of the money that he has built. Imagine if you had your money in 401k or traditional IRA, or maybe in mutual funds, or even in real estate, given what has happened in the market in the last couple of, years. A lot of volatility has happened, but with an index universal life like this, you can be able to protect what it is that you've built over time. And can you imagine this person has $250,000 cash in their life insurance? Do you think this person can take advantage of, I want to put money down for a property? Do you think this person can take advantage of, I want to use this to lend to other people and get extra income from the spread that I'm going to get? Do you think this person can take advantage of, oh, I want to be able to invest in another business and be able to generate more revenue? This gives this person an assurance that I can take care of things for myself. How much is the life insurance that was bought? The person bought in 2015, $1 million. This life insurance is less than 10 years old, and the person has already built cash value of over $250,000 into it, 8 years down the line. This is the power of what this business, talking about index universal life or a cash value life insurance, can do for a lot of people. I want to quickly show you how children can also benefit from this. And that's why I want to talk about what we call $1 million baby strategy. So for example, we look at, a newborn today, and we want to be able to put an insurance in place for that person so that we can build something into the future. Let's say we say a $250,000 life insurance and decide, oh, how can we max fund this so that we can be able to take advantage of that? Put a lump sum of $1 million into it, $1,000, and then put about $400 on a monthly basis aside for this child. You see, in the first 15 years of that, the total money that has been put into this plan is just $73,000. And the cash value at that point in time has grown to just about $95,000. A lot of people might say, oh, there's not significant difference. But you got to understand something that is called the power of compound interest. By the time this child is getting to the age of when he's finishing college, you can see about $166,000 here. At age 23, $171,000 is the amount of cash value here. That is when that child becomes, he takes his life and begins to want to do something for himself or herself. Do you think that this child will be able to fund so many things? Can the parent be able to fund their children education from this kind of plan? Can the children be able to put some money down as down payment for this child into buying a property and then begin to build wealth into the future? Not putting any extra money into this again. By the time this child gets to the age of 65, which is the age of retirement, if they don't touch the money at all, that cash has grown to over $2 million in cash. And that's, amazing. How do you begin to think about what the future of this child is going to look like? So I want to, come to the conclusion of this by looking at what kind of a financial solution should we be thinking about? My expertise is in the cash value life insurance space, and I focus more on indexing strategy because it helps me to be able to help people to keep their, value. You can keep the intrinsic value of the money that you have. Imagine if you were to put money in the bank, you can find safety, but that money is going to be subject to inflation because the interest that the bank is giving you, there's not a big return on the money that you're putting into that place. People get angry and they want to go and buy buy stock, buy mutual fund, buy ETFs and stuff like that. And they begin to lose their money because there will be good market returns and there will be times when the market will go really bad. The same amount of $200 going into the market. Let's say they are going into the market last year the way everything just went, and the market lost 20%. And what happens? The market regains 10%. The market regains another 10%. This hypothetical situation. It would take at least another 4 years before we get back to a winning streak if the market doesn't go down at all. But if we think about index strategy, how about safety that it provides you, because you can never lose money once you have money in an index situation. You have contractual guarantee that you will never lose your principal and the gains that you've gotten up to that point. Everything is locked in. You can also have access to market return. In some cases, you might have a cap. In some cases, you might have no cap. So let's assume that this person put the same $100 in an index strategy. When the market goes down, it doesn't lose money. Instead, it gains a small portion of an interest. When market rebounds to 10%, it gets the entire sum. Market rebounds to 10%, it gets the entire sum. If you have the opportunity to have a market-based returns without the risk of losing your money at all, what do you think your financial future will look like? And as I close here this evening, I want to just pretty much talk to us about, in building wealth, just like I said, we need to start thinking about the future. You see, many of us think about the accumulation phase. I'm investing, I'm putting money aside for the future. But a lot of people are not taking into cognizance. People are not taking time to think about the distribution phase of their money. When you want to have access to the money that you are investing today, do you have an idea of how much of that you're going to lose to the government in form of taxes because of the instrument that you use to invest the money? I'm not against people paying taxes. You see, the America that we have today is built on the back of taxes that, our forebears are paid, and people like us are continuing to pay. But you also want to know that there's no amount of wealth that you can build if you cannot keep more of the things that you work for with you. I just want people to pay their own fair share of taxes without paying too much than they're supposed to be paying. And ultimately, we will all pass away. When we want to transfer the things that we work for to our heirs or to the next generation or whoever the beneficiary is, there's also tax implication in that space as well. How are we planning for that? Should we not have the best strategy for all the three phases of how we build wealth, how we distribute it and transfer it to the next generation? And finally, as I close this evening, life insurance is an expression of love, caring, and wisdom. It is the only financial product that has its own feeling. That is right, feelings. It comes with emotion and deep-seated expression of love. For the vast majority of us, 9 times out of 10, the greatest economic asset is the potential earning capacity of the head or the heads of a family. Once the breadwinner or the breadwinners pass away, everything falls apart. And in this light, the family unit must be viewed as an economic enterprise. Buying life insurance on the breadwinners make a good economic sense. A life insurance purchase is a sign of wisdom, as only this financial product can perform many economic jobs simultaneously. And lastly, I want to read this letter that is written from a life insurance policy to a policy owner. It says, I am your life insurance policy. You and I have similar purposes in this world. It is your job to provide food, clothing, shelter, schooling, medicine, and other things for your loved ones. You do this while I lie in your safe deposit. I have faith and trust in you that out of your earnings will come the cost of my upkeep. At times, I may appear insignificant to you, but someday, and who knows when, you and I will certainly change places. When you're laid to rest, I may be used to provide food, clothing, shelter, schooling, medicine, and other things that your family will continue to need, just as you are currently doing now. When your work and your labor are done, mine will begin. And through me, your hands can carry on. Whenever you feel the price that you're paying for my upkeep is burdensome, remember that I can do more for you and your family than you will ever do for me. If you do your part, I will do mine. Sincerely, your life insurance policy. Ladies and gentlemen, I just want to take a moment to say thank you for taking the time, to listen to this presentation. I always want to share with people about the economic value of taking care of, our responsibility, because whether we like it or not, we age, we could get sick, we could die, but we would also need money in our retirement. We are setting up businesses today. There will be need for those things to be taken care of. There will be need for different things. Life insurance is one instrument that you can use to do a lot of things for you and so many people around you. And I want to say I'm glad that we had the time to talk about this today. And I want to say thank you to Christopher for bringing this, opportunity for us to be able to have the chance to have this conversation. Thank you.
See, thank you so much, man. This is incredibly powerful information, and I'm so glad that you're so generous with your time to be able to educate the community here. It's just very powerful. And but before we get into questions, just a few things that to react to. That book that you mentioned, "Killing Sacred Cows" by Garrett Gunderson, a fantastic book, and I actually recently finished. I had completed that a couple years ago, but I recently finished the follow up book to that, which goes further into these sacred cows that we hold in the myths about them around retirement savings and all these things that people are coached and educated on by the huge marketing machines that these financial firms are to kind of bring people into this illusion that they will be able to reach the panacea through their tools. And we know, especially through what you just walked us through, is not always true. So I encourage people to read that. Look, life insurance and cash value and the combination of the different asset types it is such a powerful thing too. I speak with it, with experience in the combination of using life insurance as a dual asset to be able to build wealth and be able to compound that interest in those things. So I think this is just very powerful tool as well. And then the last thing that I'll say, and I want to pass it to the teammates to the rest of the members to ask some questions for you. You talked about the $1 million baby strategy, and that's something that my wife and I a few years ago we were not being folks that are not necessarily wholeheartedly believers in everything that the financial markets have. We wanted to look at ways that we could be more thoughtful about this, and that's when we learned about the $1 million baby strategy and the flexibility that provides not only for saving for your kids' future, whatever that may be, if they choose to go to college and maybe they choose to be entrepreneurs and start small businesses, the life insurance policy and the cash value that accumulates in it and compounds over time can be a great asset for those young start those things. So just a fantastic presentation. I'm very grateful that you walked us through. And I see, Taz, you have your microphone on. Do you want to ask your question?
Yeah, well, it's not so much a question, but number one, absolutely fantastic presentation.
Thank
Very, very informative, sir. And yeah, I am a senior in this group here, so I'm late to the table, but I learn a lot from what you've said. Um, the second point is yesterday the comment you made about paying taxes on your IRA. Um, I had a rude awakening yesterday with my financial advisor that next year she was telling me that I may need to withdraw some money based on the IRS, and they would tell me how much. And then she says it's going to be taxed, and I'm like, why? And she said, well, you didn't pay taxes on this money, so it's going to be taxed when you, and they will, my accountant will tell me how much I need to make arrangements for next year when that comes around. So when you said that a while ago, I'm like, be darned. That's, that was right on point as to what you've said. And then the final point, even though it's not $1 million policy, but I have three grandchildren, or three here in the U.S., and that are young kids. And I just, Gerber has this grow up plan for kids. And, so at this stage, they're not $1 million policies, but I actually purchased three policies for all three of them at their young age. And, so I figure at age 18, it doubles. And so at some point, they will have monies that they could use to buy a car, they could pay for the first year of college or whatever. But I made the gift to them in that in the for the three grandchildren. I figured that's just learning from a little bit about life insurance and insurance. That's the kind of thing that and they have cash values. That's my point there. And so but that's it. And thank you so much for what you said. And it resonated a lot with me.
Thank you so much, Mr. Price. I can't say this, great enough. There's this thing that they say experience is the best teacher. I sat down with a 62-year-old lady in Chicago. I think this was about 6 months ago, if I'm not mistaken. She was like, wow, I wish I knew about so many of these things that you're talking about,
Me
30,
too.
30, 40 years ago.
Yeah.
But I'm at a point where right now I'm facing this thing called retirement, and what people are telling me get me scared every time when they talk to me. And the truth of the matter is this. The way Uncle Sam comes at us with taxes, you don't have a choice in the matter.
Mm-hmm. That's true.
You don't have a choice. Is it that you take it or you go to jail? So
Mm-hmm.
which one? So I mean, thank you for those comments, I really am happy that you start to put things in place for your grandchildren. That's the best gift we can ever give to the next generation, because that's how you pass wealth into the next generation.
Mm-hmm. Mm-hmm.
For sure, and thank you from us as well. We appreciate that. So Daly, I see that you're on. Do you have any questions or comments? If you're not able to take yourself off mute, you can type them in the chat. Otherwise, what I'll do is what I like to do then, if there aren't any more questions or comments, just in the last couple of minutes here, BC, just as we did last time, I want to like to ask our guest speakers a few questions that we ask everyone that comes on, and even you who've been on before. I want to give you the opportunity to help everyone get to know you a little bit more personally, if you will. And so the first thing that I like to ask people, we love to travel in my family, and we love to be able to experience the world, experience different cultures and all sorts of things like that. But what can you tell us about one of your best trips that you've taken, and why is that?
I mean, just like you said, I believe that traveling is the best, way to learn. And not just basically learning about culture and people, it's just life experience generally is the best way for you to build, experiences with the ones that you love and care about. Um, for me, I think The best trip we took as a family was to go to the Dominican Republic last year, August. We were in Thailand early this year, and then we were in Mexico earlier, in the summer as well. But the one that I kind of like most is the one that we did in Dominican Republic, August of last year, summer of last year. Um, you know, I've always liked to do crazy things like zip lining, bungee jumping, jumping out of the plane and stuff like that. Even though a lot of people say you are in the insurance place and you do all of these risky stuff. My wife doesn't like to do stuff like that because she's always very scared. So my little boy, it was about seven going, no, sorry, it was just turning 8 or something like that then. And then he was the first person to jump and say, you know what, we got to do this thing. And my wife was just pulling him before you know what, he's got his gears fixed on, and then the guy was just already in front. I have some of the best pictures of, family doing that activity together. Even at some point, my wife had to jump on it, and she got the best picture of all of us entirely. That it was amazing. So I think for me, in recent time, that would be the best the best stuff, and that taught me something about family is everything we got, and the time that we have to enjoy with them, we should take it.
So put
Absolutely.
Jamaica on your list next.
Oh yeah, we're going to Montego Bay in November.
Oh wow, there you go.
There you go. That's a good one right there. We got
That's a
we
good
have
one.
a lot of
Uh,
stories about Montego Bay for sure. So we'll go to the next question that we have for you here. And it's not, so of course you're working with many people on on help. You're traveling all over the world, helping people as we started out, gain and build their financial knowledge. But I know you're multifaceted. What are some of the other things that you're working on today?
I mean, apart from the fact that I do what I do in the financial service space, invest in real estate, I love to, just sit down and watch good game of soccer. I love soccer a lot. I'm a big fan of Arsenal and Barcelona. Those are the two biggest teams that I support. And I had a very good time yesterday watching Arsenal playing with PSV. That was, a very good way to come back into Champions League after so long, 6 years we haven't been in Champions League. And then, the day before, Barcelona also, we were able to take away that first match with Antwerp. So I love to watch soccer a lot. I love tennis a lot as well. I'm a big fan of Rafael Nadal and Alcaraz right now. And I also watch Formula One. I travel around the world to see all of those three major games. So for me, that's pretty much what I do. Other than
Love
that,
it.
we invest in different stocks, or to just see how things work. But I'm in the place where I'm more interested now. I can help younger people to get into the place where they begin to think of their life. And what that what made me to think in that way was when I saw that billboard that says there are so many people in America today that they take time to put likes on Facebook comments or posts on Instagram than they ever take time to think about their lives. That really scared me because that is a potential doom that is coming in the future.
Oh yeah, so true. That was very powerful, and unfortunately, and sobering how true it is. And yeah, I love soccer too. We can still be friends. I do root for the Premier League. I do root for Man City, the
That's
rivals
okay.
Arsenal.
That's okay.
And then of course I love Real Madrid as well. Your competitor for Barcelona and Vinicius Jr. So I'm really a big fan. But we can still be friends. It's okay.
I know.
It's cool. Well, look, the
you,
last
you
two
don't
questions.
you don't want you don't want to watch
Last
a game. You don't want to watch any of those games with me, especially on those soccer. My team, Man City, is playing. Because you'll either get hit in the face, kick in the feet, and that's it. Because I play the game in the room.
Yeah, man. So the last two questions that we have here are the first one is, what does financial freedom mean to you? Again, one of the most powerful concepts that really contributed to the shift in my thinking over the past several years here this idea of financial freedom, right? And this concept, of course, we're all taught go to school, get a good job, get some benefits, do all these things, and and then trade your time for money. And if you do it more, then maybe you'll be able to go higher in that corporate ladder, and you'll be able to do those things. But then you're still trading more of your time for money. You don't have any control over your time. And then I started learning about this idea of financial freedom and the power of it to be able to have complete control of your time and to do what you want to do on your terms. And so I love to ask this to people who are initiated and knowledgeable about this idea of financial freedom and share that knowledge with others. But tell us what your thoughts are, what financial freedom means to you.
I mean, it's for me, it's just one simple sentence. Financial freedom is financial, freedom of time and freedom of money. I want to be able to do whatever I want to do without having to think about, do I have to get permission from somebody to be able to go there or to do it? Or do I have to check my wallet to be sure that I can afford it? That for me is what is most important. But the biggest part of it is for me to be able to do that, I need to be able to remove myself from the entire equation of how the money can work and all the time can work. I mean, right now I'm still self-employed, even though I say I have a business, because if I don't work this business right now, it doesn't go as, it should be. But there will be a time when I have to have a system that totally 100% removes me from the equation. Then I can have time, freedom. And that system must also be producing enough money for me to be able to live the kind of lifestyle that I want. So that's the way I look at it. Freedom of money and freedom of time is what I consider to be financial freedom.
Love it. Love it. And then lastly, I want to make sure that you have an opportunity to speak to this one too. So the name of this meetup is Wealth Mindset. And when I was creating this meetup, it was I was very thoughtful, very intentional about the words, the names that would be used to call this. And Wealth Mindset to me is something that's very powerful and from my point of view, and I'm sure it may have different meanings from others. What does having a wealth mindset mean to you?
I mean, scarcity is what I don't believe is uh, exists. As long as people know that there's abundance in this world, everybody can get whatever they want, whenever they want it, from wherever they want it, then they have a mindset that they can be wealthy. Um, what is wealth to me might be different from what is wealth to you. It could be different from what is wealth to Mr. Price or, Bailey. But the truth of the matter is, at the end of the day, what gives you the peace of mind that you want is what I consider, that work. But the mindset is you have to work for it. You cannot fall on your laps and just expect that it's going to happen. It doesn't take, it doesn't come easy. You have to put a lot of time and work into it. Over time, you can be wealthy if you understand, the tenets of how to build wealth. You need money to be able to make more money. You have to have enough time to be able to build something. We're not in a get quick, rich, scheme. People need to know that it's going to take a while for them to be able to build whatever it is that they want to build. And ultimately, we need to be able to protect what it is that we build. It's not about how much money we make, how much of it can we keep. That will determine when people will get wealthy or not. But not having the mindset to work for it, to keep going, regardless of whatever happens, that is where the problem is. And that, I think, is the mindset that people need to have. What other ways can I be able to create money by removing myself from the equation as against, working for money?
Well, BC, it has been fantastic having you, share your knowledge and expertise with the community here that's live and with the folks that are going to be catching us on the recording that we post on YouTube tomorrow. Before we sign off, why don't you let everybody know how they can get in contact with you?
Okay, I mean, if you go on any platform that you probably want to go on, my um, platform, every one of them is Bisi Ogunwale. It is Instagram, Twitter, Facebook, LinkedIn. Just look for Bisi Ogunwale. At Bisi Ogunwale is what my name is. If you want to be able to reach me, my number is 309 278-3500. Again, 309-278-3500. And then my email address is bcogunwale.wsb@gmail.com.
Excellent. So what we'll do is we'll get all that information. I will circulate it out to the members of the meetup. We'll also post it across our social media and our followers that we have on social media across all the different channels. And we'll continue to, just share this message and help it get the tentacles and the reach that it needs to be able to penetrate folks. And hopefully, my desire is that folks will take the time to reach out to you to learn more and continue to invest in themselves and their future. So thank you very much for tonight. Thank you, everybody, for joining this evening. And I'm going to sign off.
Thank you.
Thank you so much.
Thank you.
Thanks to both of you. Good. Bye.
All right.
Thank